They tell you it's just a small loan, a little help until payday, quick cash when you need it most. But what they don't tell you is that the interest can hit 400%, that once you're in, you almost never get out, and that the entire system is designed not to help you but to trap you. Payday loans don't save people, they feed on them. And the system that allows it? It's perfectly legal. Before we start, drop your state in the comments. Let's see where payday lending is worst. Who's seen those stores on every corner? Who's been inside one? Who's still paying off a loan they took out months ago? You're not alone in this. This is educational content, not legal or financial advice. Payday lending laws vary significantly by state. Always verify your specific rights and consult with consumer protection resources or legal aid before making decisions about debt. They call it a short-term loan, a bridge loan, emergency cash, a simple way to get a few $100s to cover an unexpected bill, a car repair, groceries until your next paycheck comes in. But for millions of Americans, payday loans aren't a bridge. They're a black hole. They're a trap disguised as help. They're a door that closes behind you the moment you walk through it. The pitch sounds harmless, almost friendly. No credit check required. Instant approval. Cash in your account today. Bad credit? No problem. The ads show smiling families, relieved faces, people getting back on their feet. What they don't show you, what they will never tell you in those commercials, is that most borrowers can't pay the loan back in 2 weeks. That's not an accident. That's not because borrowers are irresponsible. That's the business model. The moment you fall behind, the loan renews, the fees restart, and you're trapped in a loop that was engineered from day one to never end. Let's talk numbers, real numbers, because this is where the trap becomes visible. A $300 loan with a $45 fee doesn't sound that bad at first glance, does it? $45 to get $300 when you desperately need it? That feels manageable. That feels like relief. Until you do the math. That $45 fee for a 2-week loan is the same as a 391% annual interest rate. 391%. Not 15% like a credit card, not 6% like a car loan, not even 25% like a bad credit card. 391%. In some states, the rates go even higher. 400%. 500%. In some cases, over 600% APR, depending on the fees and structure. Now here's what actually happens in real life, not in the marketing brochure. You borrow $300. 2 weeks later, you owe $345. But you're in the exact same financial situation you were in 2 weeks ago. Probably worse, because you just spent 2 weeks stressed and maybe missed work or had another expense. You don't have $345. You barely had $300 2 weeks ago. That's why you needed the loan in the first place. So what do? You roll over the loan. You pay the $45 fee to extend it another 2 weeks. Now you've paid $45 and you still owe the original $300 plus another $45 fee in 2 more weeks. 2 weeks later, same situation. You pay another $45. You still owe $300. Do this for 6 months, which is completely normal, which is what most payday borrowers actually do, and you've paid $585 in fees on a $300 loan. You've paid almost double what you borrowed, and you still owe the original $300. A single mom in Texas borrowed $400 to fix her car so she could get to work. 2 years later, she'd paid over $5,000 in fees and rollovers, and still owed $700. That's not bad luck. That's not poor planning. That's design. Do it for a year, and you've paid $1,170 in fees, almost 4 times what you borrowed, and you still owe the principal. Miss a payment entirely? They hit you with NSF fees, late fees, collection fees. Your $300 loan can balloon to $2,000, $3,000 more. And every dollar of that is legal in dozens of states across America. But let's zoom out from the individual trap and look at the bigger picture. Because this isn't just happening to a few people. This is an industry, a massive, highly profitable industry built entirely on the desperation of working people. Payday lenders know exactly where to set up shop. They don't locate randomly. They target specific neighborhoods, specific demographics, specific vulnerabilities, next to pawn shops, next to check cashing stores, next to dollar stores and liquor stores. In neighborhoods where banks have closed their branches, in areas with high poverty rates, high unemployment, low access to traditional credit. They cluster near military bases because service members are often young, living paycheck to paycheck, and can't afford to have their security clearance affected by bankruptcy or major credit problems. Even the Pentagon has warned about payday loans near military bases because soldiers in debt are security risks. Think about that. An industry so predatory it threatens national security. They set up in communities of color at disproportionately high rates. Studies have shown that even controlling for income, payday lenders are more concentrated in Black and Latino neighborhoods than in white neighborhoods with similar economic profiles. They know who's struggling. They know who's living paycheck to paycheck. They know who's desperate enough to sign anything that promises immediate relief, and they position themselves right there, right where that desperation is highest. They don't lend to help. They lend to harvest. Because payday loans aren't about credit. They're about control. They're about creating a permanent customer base that can never escape. The payday lending industry doesn't profit when you pay off your loan. They profit when you can't. Every missed payment means another fee. Every rollover means another commission. Every extension means more interest. Your fear is their revenue stream. Your panic is their business model. Your feeling of having no other option is exactly what they need to keep the system running. Think about that for a moment. A healthy lending system wants borrowers to succeed, to pay off their loans, and become stable enough to borrow again later for bigger things. But payday lenders don't want you to pay off the loan. They want you trapped in that 2-week cycle forever, paying fees indefinitely while the principal never goes down. They call it helping working families. They say they're providing a service to underbanked communities. They claim they're offering access to credit for people who can't get traditional loans. But the truth is, payday lending is one of the most profitable industries in America, precisely because people can't afford to escape it. The profit margins are enormous. The default rates are built into the model. The cycle is the point. It's a system built on shame, designed to make you think this is your fault, that you're bad with money, that you should have known better, that you deserve this because you made a bad decision. You don't. You were never the problem. You're not bad with money. You're reacting to a trap built by an industry that understands exactly how desperation works and has spent decades perfecting the art of exploiting it. The problem is a legal loophole big enough to fit a multi-billion-dollar industry. The problem is a regulatory system that allows interest rates that would have been called usury and been illegal everywhere in America 50 years ago. And here's what makes it even worse. This isn't just tolerated, it's protected. Payday lenders spend millions of dollars every year lobbying politicians to keep those loopholes open, to block regulations, to fight interest rate caps, to prevent consumer protections. When states try to cap interest rates at something reasonable, say 36%, which is still high but at least not predatory, the payday lending industry fights back hard. They fund campaigns. They donate to politicians. They hire lobbyists. They run ads claiming that limiting payday lending will hurt working families by taking away their access to credit. And when they lose in one state, when regulations finally pass, they don't just shut down, they rebrand, they restructure. They call themselves installment lenders instead of payday lenders. They move their operations online where state regulations are harder to enforce. They partner with banks in states with looser regulations and lend across state lines. Same trap. New name. Different paperwork. Same 400% interest rates. And the cycle continues. Imagine if, instead of lobbying to protect 400% interest rates, those millions went toward community lending programs, small emergency funds, local credit unions, paycheck advances at fair rates. The same money that fuels the trap could have freed millions. But that's not what happens, because the system isn't designed to help people escape poverty. It's designed to profit from it. And here's the cruelest part that nobody talks about. This system doesn't just trap individuals. It drains entire communities. Research has consistently shown that payday lenders cluster in low-income neighborhoods. That's not a coincidence. That's targeting. When a payday lender opens in a neighborhood, it doesn't bring prosperity. It extracts wealth. Every fee paid, every loan rolled over, every interest payment, that's money leaving that community. Money that could have been spent at local businesses, saved for emergencies, invested in education, used to build stability. Instead, it flows upward to payday lending companies, many of which are owned by private equity firms and large financial institutions. The money leaves the neighborhood and never comes back. They target the people least able to fight back. They build an economy of extraction, one desperate loan at a time. And the communities that need economic investment the most instead get businesses designed to drain them dry. And the impact compounds. Payday debt leads to bank account closures when people can't cover the automatic withdrawals. Bank account closures make it harder to get jobs, cash checks, access other financial services. The cycle of exclusion deepens. Payday debt leads to evictions when people can't pay rent after paying loan fees. Evictions destroy credit, make it nearly impossible to find housing, destabilize families, hurt children's education and health. Payday debt leads to car repossessions when people can't afford both the loan payment and the car payment. Losing your car in many parts of America means losing your job. Losing your job means losing everything else. This isn't abstract. This isn't hypothetical. This is happening right now in every state that allows predatory payday lending to hundreds of thousands of families. Here's a fact that should make you pause. There are more payday lending locations in America than McDonald's and Starbucks combined. Think about that. More payday lenders than the two most ubiquitous chains in American life. You can't drive through most cities without seeing multiple payday lending stores, sometimes on the same block. That's not because people love borrowing money at 400% interest. That's not because payday loans are a great financial product that everyone wants. It's because the system thrives on desperation. It's because the business model works, not for borrowers, but for lenders. And it's designed to keep it that way. For every person who successfully pays off their payday loan and never goes back, there are 10 more who roll it over month after month. For every dollar borrowed, 5 more get spent on fees over time. It's not a glitch in the system. It's not an unfortunate side effect. It's the plan. It's how the industry makes money. The Consumer Financial Protection Bureau found that more than 80% of payday loans are rolled over or followed by another loan within 14 days. 80%. That means the vast majority of payday lending revenue comes from people who are trapped in the cycle, not from people successfully using it as a one-time bridge. And the average payday borrower stays in debt for about 5 months and pays $520 in fees on an average loan of $375. More in fees than they borrowed in the first place. That's not lending. That's extraction. That's a system designed to keep you in debt, not help you get out of it. And yet, the same lawmakers who talk constantly about personal financial responsibility and self-reliance take campaign donations from the payday lending industry. The same politicians who say people need to live within their means and make better choices look the other way, while an industry keeps millions of Americans in a cycle of debt they can't escape. The payday loan lobby doesn't just survive in this environment. It flourishes. Because politicians benefit from their donations. Because the industry provides jobs and tax revenue in some districts. Because it's easier to blame individual borrowers for bad decisions than to admit that the system itself is predatory. But here's the reality. If payday loans were actually helpful, if they were actually solving financial problems, people wouldn't need to take out loan after loan after loan. If the product worked the way it's advertised, as a short-term bridge, the average borrower wouldn't be in debt for 5 months. The fact that the industry depends on repeat borrowing, that it makes most of its money from people who can't escape, that it targets the most vulnerable communities, that tells you everything you need to know about what payday lending really is. Drop a "seen it" in the comments if there's a payday lender on your block, or if you've ever been inside one, or if you know someone still trapped paying fees on a loan they took out 6 months ago. But here's what they don't advertise. Here's what they don't want you to know. Here's the part that breaks their business model. You can get out. You can break the cycle. And it starts with understanding that you have more power than they've led you to believe. Let's talk about what you can actually do. First, stop the automatic withdrawals immediately. Most payday lenders require access to your bank account as a condition of the loan. They set up automatic withdrawals for the payment date. And when that date comes, they pull the money whether you can afford it or not, often triggering overdraft fees, bounced payment fees, and a cascade of other financial problems. You can revoke that authorization. Right now. Today. Call your bank or credit union. Tell them you're revoking authorization for the payday lender to debit your account. Use those exact words. I'm revoking authorization. Banks are legally required to stop the withdrawals once you revoke authorization, even if you previously gave permission. Follow up in writing. Send a letter or email to your bank confirming that you've revoked authorization for name of payday lender to make any withdrawals from your account. Keep a copy of this communication. Yes, the payday lender will be angry. Yes, they'll call you. Yes, they'll send threatening letters. But stopping the automatic withdrawals gives you breathing room. It gives you time to figure out your next move without watching your bank account get drained every 2 weeks. If you're worried about your account being overdrawn anyway, and you can't stop the payment in time, you have another option. Close the account and open a new one at a different bank. That immediately stops all automatic withdrawals. The payday lender no longer has access. This will affect your banking relationship temporarily. You might be reported to check systems, which tracks banking problems. But being in check systems is fixable. Being trapped in an endless payday loan cycle is much harder to fix. Then, know your state's laws and use them. Payday lending is regulated at the state level, and the laws vary dramatically. In some states, payday lending is essentially banned or so heavily regulated that it's not profitable. In others, it's completely unregulated and predatory lending runs wild. Find out what your state allows. Search your state payday loan laws or your state interest rate cap. Know what the maximum allowable fees are. Know whether your state requires lenders to offer extended payment plans. Many states require payday lenders to offer an extended payment plan if you can't pay on the due date. This is usually a no-interest plan that gives you 60 to 90 days to pay off the principal without additional fees. But lenders don't tell you this exists unless you specifically ask for it. If your state has this requirement, call the lender before the due date and say, "I can't pay the full amount. I'm requesting an extended payment plan as required by your state law." Get it in writing. If the lender refuses or claims they don't offer this, contact your state attorney general's office. Report them. In many states, refusing to offer a legally required payment plan is a violation that can result in fines or loss of license. If you're dealing with an online payday lender that's based in another state or offshore, this gets more complicated. But you still have options. Many of these lenders are operating illegally in your state, even if they claim otherwise. Report them to your state attorney general and to the Consumer Financial Protection Bureau. Next, file a complaint with the CFPB. It's free and it works. The Consumer Financial Protection Bureau exists specifically to handle complaints about financial companies, including payday lenders. and filing a complaint actually does something. The CFPB forwards your complaint to the company and requires them to respond. It creates a record. It applies pressure. Go to consumerfinance.gov/complaint. It takes about 10 minutes. You describe what happened, upload any documentation you have, and submit it. The CFPB sends it to the lender, who has to respond within 15 days. This doesn't automatically make your debt disappear, but it does several important things. It creates a paper trail showing that you're disputing the debt and the practices used. This can be important if the lender tries to sue you or send you to collections. It sometimes results in the lender offering a settlement or payment plan they wouldn't have offered otherwise because they don't want the CFPB scrutiny. It contributes to a database that regulators use to identify problem lenders and build cases for enforcement actions. Your individual complaint might feel small, but when hundreds or thousands of people complain about the same lender using the same predatory practices, that's what builds the case for regulatory action. Also, understand what payday lenders can and cannot do to collect. Payday lenders will try to scare you. They'll call multiple times a day. They'll send letters that look like legal documents. They'll threaten to garnish your wages, put a lien on your property, have you arrested, report you to credit bureaus, ruin your credit forever. Most of this is illegal. Debt collectors, including payday lenders trying to collect their own debts, are bound by the Fair Debt Collection Practices Act. They cannot threaten you with arrest or criminal charges. Failing to pay a debt is not a crime. Debtors' prisons are unconstitutional. They cannot have you arrested. Call you before 8 a.m. or after 9 p.m. They cannot call you at work if you tell them not to. They cannot harass you with constant calls. Lie about the amount you owe or about being attorneys or government officials. They cannot pretend to be law enforcement. Threaten to take actions they don't intend to take or can't legally take. If they threaten to sue you, they have to actually be planning to sue, and they have to follow proper legal procedures. If a payday lender or collector violates these rules, document it. Record the calls if your state allows it. Keep the letters. Then report them to your state attorney general, the CFPB, and the Federal Trade Commission. You can also sue them for FDCPA violations, and if you win, they have to pay your attorney fees. Knowing your rights changes the power dynamic. When you know they're breaking the law, their threats lose their power. Before you take another payday loan, consider all your alternatives. I know you're reading this because you're in crisis right now. I know you need money today, not next week. I know the payday lender is right there, offering instant cash, and everything else feels slow and complicated. But before you walk in there or click that button, consider every other option. Ask your employer for an advance on your paycheck. Many employers will do this, especially if you've been there a while and you're honest about the situation. Ask family or friends. I know that's hard. I know it feels like failure. But borrowing $200 from someone who cares about you at zero interest is infinitely better than borrowing it at 400% from someone who wants to trap you. Sell something. Anything. It's temporary. You can buy it back later if you need to, but that immediate cash without debt is worth it. Local charities, churches, and community organizations often have emergency assistance funds. They'll help with rent, utilities, food, medical bills. You don't have to be a member. You just have to ask. Credit counseling agencies, legitimate nonprofit ones, not the scams, can sometimes provide emergency loans or connect you with resources. The National Foundation for Credit Counseling is a good starting point. Some credit unions offer payday alternative loans, PLs, with much lower interest rates and longer repayment periods. You usually have to be a member for at least a month, but if you're not in immediate crisis, this is worth setting up now for next time. Many banks offer overdraft protection or small lines of credit to checking account holders. The fees are still high, but not 400% high. I'm not saying these options are easy or pleasant. I'm saying they're all better than a payday loan that will trap you for months and cost you double what you borrowed. Finally, if you're already trapped, negotiate or default strategically. If you already have payday loans and you can't pay them, you have two main options. Negotiate a settlement or stop paying and deal with the consequences. Negotiating a settlement. Many payday lenders will settle for a fraction of what you owe, especially if the loan has been in default for a while. They've already written it off on their books. Getting something is better than getting nothing. Wait until the loan is past due and they're calling you constantly. Then offer a lump sum, 30 to 50% of the principal, no fees. I can pay you $150 to settle this $300 loan in full. That's what I have. Take it or leave it. Get any agreement in writing before you pay. Make sure it says clearly that the payment settles the debt in full and they agree not to report it to credit bureaus or pursue any further collection. Strategic default. If you can't negotiate and you can't pay, sometimes the best option is to simply stop paying and let the debt go to collections. This will hurt your credit. They'll call and harass you. It's stressful. But here's the reality. Payday lenders rarely sue over small debts. It's not worth the court costs for them. They'll threaten to sue, but they usually don't follow through on loans under $1,000 or $2,000. And even if they do sue and win, in most states, they can't garnish Social Security, disability, unemployment, or most government benefits. They can garnish wages, but only up to 25% in most states, and they have to go through a legal process to do it. I'm not saying default without thinking about it. I'm saying that sometimes protecting yourself from an endless cycle of fees and stress is more important than protecting your credit score. Your credit can recover. Your mental health and financial stability matter more. Let's reframe what's actually happening here, because the story you've been told, the story the payday lending industry wants you to believe, is that this is about personal responsibility, that people who can't pay back their loans made bad choices, that if you're trapped in payday debt, you should be ashamed. That's a lie. And it's a deliberate lie designed to keep you compliant, keep you paying, keep you quiet. You're not bad with money. You're reacting to a system built specifically to exploit financial stress, to profit from desperation, to trap people who are already struggling and extract every possible dollar from them before they manage to escape. The payday lending industry exists because America has failed to provide basic financial infrastructure for working people, because wages haven't kept up with costs, because healthcare is absurdly expensive, because housing is unaffordable, because unexpected expenses can destroy someone living paycheck to paycheck through no fault of their own. And instead of fixing those systemic problems, instead of ensuring people have living wages and emergency savings and access to affordable credit, we've allowed an industry to grow that feeds on the desperation those failures create. Payday loans aren't the cause of poverty, but they make poverty worse. They're a symptom of a broken system, and they're also an additional trap that keeps people from escaping that system. This isn't just about money. It's about control. It's about who benefits when you're desperate. It's about who profits when you blame yourself. Payday loans were never designed to help you get ahead. They were built to keep you just far enough behind that you have to come back. That's not finance. That's not a service. That's extraction. That's exploitation dressed up in friendly advertising and convenient locations. The industry understands something fundamental about human psychology. When you're in crisis, when you're scared, when you need money right now, you'll agree to almost anything. You'll sign papers you don't fully read. You'll accept terms you don't fully understand. You'll take a deal that you know, somewhere in the back of your mind, is probably bad, because the alternative is worse. And they use that. They position themselves right there in that moment of desperation and offer you a solution that feels like relief, but is actually a trap. So if you're in the cycle right now, pause, breathe, look at the pattern. How many times have you paid that fee? How much have you paid total versus what you actually borrowed? How long have you been telling yourself, just one more time, or next paycheck I'll pay it off? Because the moment you understand the system, the moment you see clearly that this isn't your failure, this is their design, you've already started breaking it. You don't owe these companies another cent of your peace of mind. You don't owe them your mental health. You don't owe them your future. What they fear most is an informed borrower who understands their rights and refuses to play along. Once you see how their system works, you stop being their ideal customer. You become the thing they fear. Someone who fights back. Here's what I want you to remember. The payday lending industry has spent decades and billions of dollars building this trap. They've lobbied politicians. They've written the laws in their favor. They've crafted marketing that makes their product seem helpful. They've positioned their stores exactly where they'll catch people at their most vulnerable, but they've made one critical mistake. They assumed you'd never figure it out. They assumed you'd keep blaming yourself. They assumed you'd stay ashamed and silent and isolated, thinking you're the only one trapped. You're not alone. Millions of Americans are in payday debt right now. Millions more have been trapped and escaped. And the more people talk about it, the more people understand what's really happening, the harder it becomes for this industry to operate in the shadows. So comment your state below. Tell your story if you want to. Tell us how much you borrowed and how much you've paid. Tell us how long you've been in the cycle. Tell us if you got out and how you did it. Because someone scrolling through these comments right now is in crisis. They're thinking about going to that payday lender on the corner. They're thinking they have no choice. They're thinking it's just this once, just until next week, just to get through this emergency. And seeing your story, seeing that they're not alone, seeing what actually happens, seeing that there are other options, that might be what stops them from walking into that trap. Or what gives them the courage to stop paying and start fighting. If this video opened your eyes, if it made you angry, if it made you realize this isn't your fault, share it. Send it to one person you know who's struggling. Post it where people can find it. Because the only way to kill a scam this big is to drag it into the light. The only way to break this cycle is for enough people to understand what's really happening and refuse to participate. Next video. The alternatives to payday loans. Nobody tells you about. And how to build a $500 emergency fund even when you're living paycheck to paycheck. Because the best way to avoid the trap is to never need it in the first place. Payday lenders survive on silence, on shame, on people thinking this is just how it is and there's nothing they can do about it. But now you know. Now you see it. And that changes everything. Remember, shame keeps you silent, and silence keeps them rich. You're not bad with money, the system is. And the moment you understand that, you've taken the first step toward freedom.